What's up, traders? Welcome back to the channel. In today's video, we're going to talk about my two positions so far this week on EurUsd. The first one was a loser, but the second one was a winner that was big enough to cover the loss and still put me profitable this week. So I'm going to break down both positions for you here. But if you're new to the channel or the feed, my name is Austin Silver. I'm the co-owner and head of trading and education at ASFX. And I just want to thank you for being here and ask you, if you're new, hit the red subscribe button down below me. That way you don't miss any of my future videos. I want to make sure you're getting all of my content to hopefully help you make better trading decisions going forward. So if we flip to EurUsd and we take a look at the chart here, this is what it looked like when we woke up. I had the potential for longs basically from Friday. As you can see, Friday afternoon, we had a strong push after the news all week last week. If you watch my videos religiously, like if you watch in order, you'll remember I was talking about EurUsd last week possibly bouncing off this 1.1110 level, because you can see we hit it Wednesday, Thursday, and Friday. We couldn't really move off it. Friday, it broke back above the 200, which got me interested then yesterday, Monday, it got me interested to take a long position, potentially. So I was able to go to the 1 minute, the shorter time frame. Here, we're looking at the 15 minute. I was able to go to the 1 minute and find a D1 entry with a stop loss of about 6 pips. The D1 is what we teach in our advanced divergence course. And if you want more information on that, there's information in the description of this video. I put a link down there. So the D1 entry presented, it had about a 6 pip stop, and I knew I wanted to trade this to the 800 EMA. That was my take profit idea here. And the reason for that was because the long bias was confirmed with the TDI being in the buy zone. So seeing the TDI in the buy zone and the 800 EMA above me tells me that I should look to trade long to that 800 EMA. Now, I found my D1 entry. I like my risk reward because I could get just about 2R trading up to that 800 EMA with the 6 pip stop. So the trade made sense to me. Now, as you can see, if I play the replay, it went up very quickly. It pinned towards the 800 and then fell back away from it and stopped me out for the 6 pip loss. Now, at this point, there was one piece of the analysis that I did not take note of when I first took the position, and after the fact, someone in the VIP chat, I think it was Kareem, pointed it out to me, and he said, hey, this probably was something that would decrease your probabilities. And he was right. What he pointed out to me was the divergence that was on top. So from Friday's RSI high to today's RSI high, you can see the RSI falling, but price action rising. That divergence tells me that this rise that was created from Friday might not continue. It tells me that there might be some change going on. However, because the TDI was holding the buy zone so well, I still had the idea that we could hold these EMAs on the short term and come higher to the 800. When it stopped me out here, I was thinking maybe it's got to just come down to the 200 and it'll present there, which is the same price as the Asian session low. So then you'd have the 200 EMA and the Asia session low as the confirmation level. So I waited. I didn't get frazzled. I never really do anymore. I used to when I was a new trader, but I tried to make sure that I exercise the best habits, especially for members in our VIP chat, because I don't want them to build the bad habits that I had, which would be getting frazzled and then in a situation like this, jumping back in and trying to take this short. It's just foolish. So as it came down to the 200 here and sat underneath the 200 EMA, right at the same price that it pinned during the Asia session low, so this would be your Asian low, I got interested again to still take it long. So let me delete this. The divergence is still there, so we'll leave that. But now, if I could get a long opportunity down here, trading it back up to the 800, I'm talking about 20 pips of potential movement. So that really got me interested. So I'm waiting and I'm waiting and I'm waiting. And then finally, we got a 1 minute D1 entry again. The same entry that I took off the 50 EMA. And this is why you have to stay focused, because sometimes you're just early. You're not wrong. So then I was back in the trade at 1.1120. A little bit higher than how I have it there. Just about there. My stop was at the pin low, 7 or 8 pips, and I was looking to get 17 or 18. So over 2R out of this one. And I knew that if I hit it with the same size that I hit the first trade, I could not only cover but end profitable if this goes all the way up. Because now, you remember I lost 7 pips on the first trade. This is a 17 pip take profit. So it made sense for me to be in this trade to cover and still hopefully be profitable on the day. So I took the second position, and as I said to you in the beginning of the video, this one ended up working out really nicely for me. It goes up to the divergence line and ends up busting through and going right to the 800 EMA just like I wanted, as you can see here. It did take a little bit of time there in that chop, but it was worth the wait because you know that stop, you have that low of day stop, it's been tested twice already. So you trust it. And if it breaks that, then you're just done with it. You move on. That's why that level is so good, and that's why I was willing to get back in this trade. Now, it doesn't just go 17, it actually goes higher. It goes about 26 in that first push, and then, whoops, as the morning goes on, we move into the afternoon here, the changeover of day happens. It kind of chops around during the Asian session because EurUSD is not going to move a lot during the Asian session. But then London wakes up and you get a couple more kicks here, right back up towards that high. And this is where I was up in the middle of the night because you guys know I don't sleep. And I made sure that my stop was then locked in profit right here at 111.22. So you can see the price when I put my crosshair there on the right side, 111.22. So that's where I had my stop, 2 pips above the entry price, because I closed some here at the 800, a little bit more than half of it, and I let the rest of it run. So then as it came back down this morning on that US dollar CPI news, you can see it stopped me out, and it's still moving lower now. It stopped me out in profit. So it was good to move the stop into profit, and I was able to manage this trade well enough that I covered that loss, and I'm still profitable on the week between these two positions. Now, the thing that I really want to make sure you guys take out of this trade, because I'm going to do another video on my next trade, which I'm in right now on CAD JPY. That'll be out after you see this. So make sure you go watch that one next so you can see them in order. But what I want you to take out of this is it was not an A or a B setup. I know a lot of you guys aren't grading your setups as far as A, B, or C, but you really need to, because if you have A, B, or C setups, then you know A setups get 2% or whatever your high, risky setup is, whatever your aggressiveness is. B setups get 1%, C setups get 0.5%, something like that, whatever the numbers match up for you based on your risk profile, right? Here, these are both C setups, so I'm not putting a lot of risk on them, but still being able to go get 3.5 R, a little bit more than that on this setup, with even just 0.5% or 1% risk, you're going to be able to get a nice return on these trades. So even though they're C's, you can still read risk reward and put a small risk on to make that money, and that adds up for you. But you want to make sure that you're taking good C setups. If this TDI wasn't as long biased as it was, and if I hadn't had this strong move and hadn't I been long biased from the previous week, it would have been a tough trade to take here on EurUSD because you have divergence on top, which tells you it could hit that purple line and stop. The TDI at that point was falling into reset, so that's not great. And you're under the 50 EMA coming off the 200 though. So you're like in between the EMAs. You'd rather be above the 50 like my first position. So it wasn't a super high probability trade, but it still worked out really well. So again, using a risk profile, you can still take C setups. You just have to size down and be appropriate in your position with these trades. So those were my 2 EurUSD trades so far this week. As you can see today, it's pushing much lower. It would have stopped me out if I left my original stop in, so I'm glad that I moved the stop. And now, what I'm managing right now is this position on CAD JPY. So I'm long here up about 3 pips as we're starting to get some movement. So what I'm going to do now is end this video here. I'm going to film a video on this CAD JPY trade for you when it finishes. So make sure if you're watching this, I guess, after today, you go check out the CAD JPY recap too. The week will keep rolling. I hope this video helps clarify my EurUSD positions. I hope it makes it clear the way I'm looking at the trade and why I size down into certain trades, because it helps control my risk. So I hope it helps you make better trading decisions going forward. If you have any questions for me, please drop a comment down below, and I'll see you guys in the CAD JPY recap.